Disclaimer: these videos are not meant to be used as memorandums. Please consult memorandums for that.
Hello, mathematical literacy learners. Welcome to question 2. This is our fourth question 2. So there was a last question 2 for the intense question revision that we're doing. Hazel decides to start a new business venture and bake chocolate muffins. She sells the muffins for 25 rands, and her only fixed cost is paying her 16-year-old niece 500 rand a month to maintain the business social media page. So there's an employee, the employee here, who's getting a pay of 500 rand a month, or a subscription, whatever. And then her variable costs include the ingredients and electricity. She calculated the variable costs per muffin. So this is the cost. Her variable cost for ingredients and electricity to be 15 rands per muffin. So each muffin costs around 15 rand in total to make. This includes electricity, ingredients, and everything else that's needed to make the muffin. So 15 rands per muffin. Okay, so the first question says, define the term fixed cost. Now, when they say in the given context, they like to say this. They mean when you are defining, don't be general. Don't give us a general definition. They want you to refer to the information given above. Now, we know that here there's a fixed cost, right, which is paying the 16-year-old every month. Fixed means it's standing still, does not change. So this is a payment that is made every single month and it does not change. And that's just what fixed costs mean. So really they're not interested in how perfect you can word it in English. They just want to know if you understand that it's a payment because it's a cost. So this will be a payment to the niece, which does not change, right? Oh, well, I put together some words. Moving on. Explain why electricity is classified as a variable cost. First, what does it mean when they say variable? It means that it changes. Remember, fixed means it's standing still. It's the same every single month, like rent. Most people pay a fixed amount of rent every month until the landlord decides to increase. But then after that, it'll be fixed again for a certain amount of time. So here, when we talk about variable cost, we talk about something that changes. Think about something that you buy almost every month. Things that you buy almost every month, are they like the same exact expenditure? Do you spend the same amount of money? Well, electricity depends on how much electricity you pay, you use, right? So if you use too much electricity, you'll pay too much money, and if you use less electricity, you pay less money. The amount of money you pay for electricity will depend on how much electricity you've used. So you might use 600 kilowatts for your business in January, and in February you might use 320 kilowatts in February. In March you might use 600 kilowatts. It can vary, and therefore the amount of money will also vary. That is why. So electricity, the cost of electricity depends on how much electricity you use. So we don't use the same amount of electricity every single month, I would say. Hazel states that she will make 1,500 in profit if she sells 200 muffins. Okay, so she says 1,500 profit. What is profit? Profit is that extra money you make from income when you've taken out your sales. So profit is your income minus your sales. Right? So how did she arrive to 1,500? I'm assuming that she took her income, she minused her sales. What sales? She minused her expenses. There we go. And then, she must have arrived at 1,500. So this is what they want us to prove. So what we're going to do is we're going to find out how much is 200 muffins to make, and then we're going to find out how much we're going to get from selling them, or how much Hazel's going to get from selling them. I like to put myself in the scenario and think of me as I'm Hazel. So I'm like, okay, I'm making 200 muffins. How much are the muffins going to cost me? And then I need that, and then I'm going to find out how much I'm going to make when I've sold them, and then I'm going to calculate my profit, and then I'm going to get my 6 marks. Hopefully I won't make a mistake. Okay, so let's start with making. So we can't sell muffins. So I like to be in order sometimes, because that way I know I haven't forgotten anything. So what I'm going to do is I'm going to first make sure that I make my muffins. Let's make our muffins. So it's going to cost us 15 rand times 200. So making them, and then 3,000. So we've made the muffins and we've spent 3,000 rand on making the muffins. Now let us find out how, let's sell them. Okay, so now for sales, each muffin will cost 25 rand multiplied by 200 muffins. And then we sold 200 muffins, and we get the amount we're going to get is okay. Now I'm going to just check if I missed anything. Now remember, they said that she also pays 500 rand per month for this amount here that is a fixed cost. Remember the fixed cost? The fixed cost that was the fixed cost. So she pays 500 rand. So this month she's also going to pay 500 rand. So that's what we're going to do. I'm just going to say, okay, the cost is 3,500 rand. I'm also going to add 500 rand there, and the cost will be 3,500 rand. Okay, then sales. Now we're going to calculate our profit. If I had forgotten until I started, I was just going to minus the 500 rand. So profit is equal to sales, which is 5,000 rand, minus the costs, which is 3,000 for making the muffin and 500 rand for advertising on Instagram. Is it? Yes. Maintaining the business page on Instagram, which is then a total of 3,500, and then 5,000 minus 3,500, and then the profit is 1,500. Therefore, it is valid. The statement is valid. Okay. Hazel did not qualify to receive NSFAS and approached the bank for a loan to pay for her university fees for 1 year. She applied for a loan of 30,000 rand with the following conditions. Right, so Hazel did not qualify to receive NSFAS and approached the bank for a loan to pay for her university fees in 1 year. For 1 year, she applied for a loan of 30,000 rand. So our loan, the money we borrowed from the bank, is 30,000 rand. And it says here that a once-off initiation fee of 1,200. Oh, silly. So isn't it so silly that they're going to add that to the cost of the loan? And then a monthly fee of 69 rand. That's also going to be added to the cost of the loan. And on top of that, they're going to add interest, which is compound. Now remember, compound means the more money you pay than on simple interest, because here interest has interest. This is a very expensive loan. Okay, so determine the amount of VAT charged on the initiation fee. So this money here is VAT inclusive. Now remember, if you don't remember, you need to go and look at the topics that I did on VAT, where I explain clearly that when it says VAT inclusive, you cannot multiply this by 15%. That is wrong, because then you are saying, you are disputing this. You're saying it's not VAT inclusive, and therefore you can add VAT. We cannot add VAT here because VAT is already included. What we can do is the opposite of adding VAT. How do we add VAT? We multiply. How do we remove VAT? We divide. So please check out those videos if you're still struggling with that. And then compound interest, of course, every time we calculate interest, we calculate the new balance and then we calculate interest. So this is annually, that's fine. Determine the amount of VAT charged on the initiation fee. So what we're going to do is, on this 1,207 rand and 50 cents, we're going to remove the VAT, and then we're going to find out how much the VAT is. There is another method where you can just immediately get the VAT. I do not like it, and therefore I don't use it. So what do? You take 1,000. You take 1,207.50, you divide by 115%, right? So this is VAT, original price plus 15%, and then the price, the VAT inclusive is 115%. It's 15% more, and therefore, if you take this is actually 115 over 100, because percentage can be written as a fraction. And if you divide this on a calculator, you get 1,15. Therefore, what it means is that we're going to take this amount and divide by 1,15, inclusive of 1050. Then I just do the last part where I say 1,207.50 minus 1,050, and then I get 157 rands and 50 cents is my VAT. So this is VAT exclusive. This is VAT inclusive. These two, when you subtract them, you get VAT. So please, if you're still struggling with VAT, please do check out the VAT topics. Hazel stated that the total loan value will be 19,364 rands and 25 cents more than the original amount if she paid it off over 24 months period. Okay, so that's 2 years. All right. Anyway, we're going to worry about more later. Let's find out how much is the actual value of the loan, because they're saying it's going to be more by this amount, but we cannot know if we don't have it. Okay, so the loan itself is this much. So this is the value of the loan now, but now this is what the bank is saying. We're giving you 30,000 rand. That's the value of the loan, 30,000 rand. But what is the actual value after all of this, all of this stuff, that fancy stuff that are adding there? So okay, she's gonna pay over 24 months. So 24 months is, since it's compounded annually, we're not gonna calculate per month. So let's convert that. That is exactly 2 years. So we don't have to worry about half a year or whatever. Okay. Now 22.1, 2.2.2, 24 months divided by 2 will give us 12, will give us 2 years. So that's the first part. We're using 2 years. And then initiation fee. One, we know that the initiation fee is just a once-off payment of 1,207.50. And then the second thing we're going to do is we're going to look at the service fee. 69 rand total service fee is 69 rand per month. So we're going to pay 69 rand for 1 month, but she's going to pay over 24 months. So she's going to pay 24 service fees, and that is going to be 69 times 24, and that's 1,656 rand. Okay, and then now we're going to have, the next thing we're going to have is interest, 24.5% compounded annually. So we're talking about compound interest, and let's start with the first year. Compound interest, that's number 3, year 1. Okay, so she borrowed 30,000 rand, and this is going to be times 24.5%, and for the first year, 3 times 24.5. Fraction, percentage can be changed into a fraction, and then a fraction into a decimal. So we divided by 100 there, and then the interest on the first month will be 7,350 rand. And then for year 2, so on year 2, what we're going to do is first we're going to look at how much she has as 7,350. So the balance is 37,350 rand. And then, so now we're calculating. So that'll be 37,350 multiplied by 24.5%, and that is going to be the interest this time is 9,150.75. So the balance here at the end of year 2 will be, so this is the loan plus interest, that is 37,350 plus 9,150 rands and 75 cents, and that will give us 9,150.75 plus 37,350, that is 46,500.75. Okay, so the total is, okay, so this is the loan amount plus interest, which is 46,575 cents, plus the initiation fee, which is 1,207.5, plus the service fee, which is 1,656 rands. And that is 49,364 rands and 25 cents. Okay, the value of this particular loan is 49,365. This is the actual one. So let's find out the difference. And therefore, we're going to say 49,364 rands and 25 cents minus 30,000. So if we subtracted 30,000 from this one, we'll have 19,364 rand and 25. So whoa, exactly what they said it would be more by 19,360. That's freaky. The statement here is correct. And it says, state one reason why a student would choose to study in a province different from their home province. Are you kidding me? Are you kidding me? That is like, so there's so many reasons why anyone would want to study outside their province. For example, I've never been to the Northern Cape. If I was still a student, I think that would be like one of the reasons now. I've never been to the Northern Cape, and there were times when I would dream about working there or something like that. So that would be interesting, like to go to a province I don't know and have a new life there, new people. It's fascinating, okay? Just like it helps you grow at the same time, you know, expand your horizon, meet new people. Whoa, it could be for any reason, you know, any reason. Run away from family. It says Mr. Marke is 35 years old. Ooh, Mr. Marke is the same age as me, and earns a gross salary of 27,500 rand. No, it's a he. He contributes 7.5% of his annual gross income towards pension. So that's our money. That's a percentage. We need to convert that into a percentage. They say when you calculate this 7.5%, use the gross income. And we have the gross income right there. So we'll be able to find the pension. He's married with one child and a member of the medical aid. He's married, that's him, and he has a wife, which means that's the person he's married with, a wife, a partner, and a member and one child. So there's 3 of them, and he's a member of the medical aid. So these people are under the medical aid. Okay, so tax table. Nothing new. Rebates, medical aid, and tax credits. So this is rebates and the tax credits. These ones are per month. So that means these amounts, if we use them, we're going to need to multiply by 12. Explain the word gross income as it is used in this context. I love this question paper. It's asking so many definitions. Okay. In this context, this gross income here just means that Mr. Marquez's total income before any deductions. Yeah, before any deduction. Not even, it doesn't matter what kind of deduction it is. It just means like it's his total, it's the money he made only in total. That's it. It's his money, his salary before any deductions. Okay, so 2.3.2 says determine Mr. Marke annual taxable income for the year 2022-2023. Okay, they want annual taxable income. So we have to make his income taxable, but not only must it be taxable, it must also be annual. Now, there are two ways we can do this, two directions we can take. We're going to the same place though. First, we can take the gross, change it into annual, and then calculate the pension, subtract the pension from the gross, and get our taxable income. Or we can just immediately calculate the pension, subtract, and then change. It doesn't matter as long as we do all the steps that are needed. Okay, 2.3.2. So what I'm going to do is I'm going to calculate the pension first. So I'm going to calculate the pension from the monthly. So the ICE is going to give me a monthly pension because I'm going to use monthly income. And that's going to be 27,500 times 7.5%. Remember, 7.5% is 7.5 over 100. 27,500 times 7.5 divided by 100. And then my pension is 2,062.5. Don't worry when I say my pension. I like to put myself in the situation. Makes me think better. Okay, now monthly taxable, because I use monthly gross, is equal to 27,500 plus minus, let's take away the pension, which is 2,062.50, and then we have 27,500, then we have 25,437.50 for 1 month, and then annual is equal to 25,437.50 times 12. See, you can times by 12 at the end. It's not an issue. 25,437.50 times 12. It does not matter which direction as long as you do every step correctly. 250. And that is his annual taxable income. You can try it by multiplying this first, calculating pension, subtracting the pension. You should arrive into the same amount. Okay. So, and then now the next question says, now you can calculate his monthly tax. Now, I'm not worried about monthly tax. First, I'm going to calculate his tax because this tax table uses annual income. So that's what I'm going to go with first. And 2.3.3. Let's first check which tax bracket does he for 305,250. Okay, let's check which tax bracket he falls into. 305, or he's on tax bracket number 2 for sure. I hope I'm getting it right. Okay, let's copy the tax bracket. Tax is equal to 40,680 plus 26% of taxable, again fighting the edge to abbreviate and shorten everything above 226,000. Okay, double check if I copied everything correctly. Oh my lord. Okay, tax is equal to 40,680 plus 26%. Multiply, off means multiply, and then I'm just going to subtract from the taxable income. Substitute the taxable income, 305. 250 minus 226,000, and then friends, and then rebates, he's 35, so he is 35, so let's check out the rebates. There he's under 65, so he's primary only, 16,425, so minus 16,425, and that will give us 34,860. Fine. And then we're going to check out the tax credits. So medical tax credits, we first need to calculate how much that's going to be, and it's himself, which is the main member, 347 plus his wife, 347 plus the child, 234. Okay, 1, 2, 3. Okay, and that is 347 plus 347 plus 234, and that's 928. You have to multiply this by 12, and then you get 11136. Okay, so we have 44,860 minus 11136, and that is 33,700 724. Now we're going to have to divide this by 12 because they said they want the monthly tax. So we divide this by 12 and it's 2,810 rands. And last question, due to the repo rate in the country, his salary was reduced from 27,500 rand to 24,800. Calculate the percentage decrease. Percentage decrease and percentage increase, there's a formula for it. It's percentage decrease or increase is equal to current value minus previous value divided by previous value, and you take all of that and you multiply by 100. You have to know this formula. Minus previous value, see now I started abbreviating again, I'm so used to it, multiplied by 100, and that will be percentage decrease or increase is equal to current value. So how much is he earning now? They're saying it's reduced to 24,800. Okay, now he's earning 24,800. He was earning 27,500. Don't know why I still remember it. There it is. And we divide that by 27,500 and we multiply everything by 100. Okay, let's find the decrease first. That is 24,800 minus 27,500. That is the decrease, minus 2,700. Divided all that by 27,500. Multiply that by 100. And then, so when we divide this, we're going to get 0.098181818. Multiply that by 100, and then you get no. Multiplied by 100, and then you get 9.8181818%. We're just going to round off to anything. Round off to, they never said we must round off. So I'm just going to round off to 2 decimal. 9282%.